Good afternoon, everyone, and I want to thank you for joining me this afternoon. And today we're actually going to be looking at determining whether to exit or remain until expiration using binary options. Now, before we get started, I do want you to take a moment and read the Nadex risk disclaimer. And this is very important for you, and it's important for us. And basically, you never want to trade with money you cannot afford to lose. So I'm going to give you a couple of minutes to read over that. And while you're reading over it again, I just want to welcome you to today's session. Hopefully you'll find something very interesting in it for you. Now, for those of you that do not know me, I have about 15 years of trading experience. I started out with a company that programmed indicators, and I actually became enticed by the price bars. I specialize in price action, volume analysis, and divergence because I believe they are all leading indicators. I'm also a frequent contributor to Stocks and Commodities, Traders World, and Top Shelf Magazine. And if you pick up Stocks and Commodities this month, you'll see it's the March issue. I have an article in it on Nadex binary options. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Conference, which was on volume analysis. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, and you can get that either on my website or through Amazon. Now, when you're trading binary options, one of the biggest issues that most traders have is, should I hold until expiration or should I exit early? Now, Nadex gives you both options. You can hold until expiration or you can exit early. This means that Nadex gives you the opportunity to manage your trade. I am a firm believer in there is one core component to being a trader. That is taking profits whenever the market is offering profits. Now, if you're managing a trade, that means that when you go into the market may have been indicating that it was going to continue moving up. Sometimes, though, it changes while you're in the trade. By managing your trade, you're actually saying, okay, I'm going to be long, but if the market changes its mind, and we all know that the market can change its mind, then you can manage it. You can either exit or you can continue to hold your position. Now, how do you manage your trade? There's a lot of different ways that you can manage a trade. It can be as simple as the profit remaining versus time remaining. For example, when I did the trading plan webinar, we put in the trading plan, if we had captured, X amount of the profit, we would exit. Okay, you could say, all right, I've captured 80% of the profit, but there's still an hour left. Go ahead and take your profits. Okay, you can use price bar formations versus time remaining. Let's say that you're long and a reversal bar forms and there's only 15 minutes remaining, then you would probably want to exit. Why? Because a reversal bar would tell you that the next price bar is going to go down. Why would you want to give back that profit? Again, the core component is your job as a trader is to take profits, okay? It can also be based on profit versus risk. Let's say that you were risking $30 on entry and now you have a profit of $50. Why not bank it? you have made approximately 150% on that. Bank your profits. It can also be based on your schedule. Sometimes, for example, today is a great day. If I'm in a trade, I'm doing a webinar, I can't monitor the trade, so I use a longer expiration, okay? Or you can do it based on a combination of all of these things, okay? Now, these are weak price bars, okay? And I want to explain the context of the price bar. In this case, this bar has made a high. In other words, when you look to the left, this is going to be the highest price bar. And this is the current bar that is forming on your chart. And what this tells me is that they pushed it up, they made a high, but then they started selling it. In other words, they could be taking profits, or sellers could actually be entering the market. So this is a very weak price bar in an uptrend. In a downtrend, this would be considered a weak price bar. Again, they pushed it down and they made a new low. So if I was looking, and let me get the pen for a moment here. If I was looking to the left of this price bar, I would not see any other price bars along that line. That means it made a low. But when it made that low, either they started taking profits or buyers stepped in and they pushed it back up and it closes right on the high. Another formation that is reminiscent of this one is this bar here. And it's pretty much the same thing. The only difference is it closes just about midway. Again, it's the same concept as this bar over here. We made a high, and if we look to the left, there's no bars that are higher than this current bar. Then, after it made the high, it pushed down, and it closed at least midway down, okay? Again, this is a weak price bar. The next one is reminiscent of the low. The only difference is it's red, but the significance is the same, okay? This low, if you look to the left, you won't have any price bars that touch that line. But after it made this low, it pushed back up and closed in the upper percentile of the price bar. This is a weak bar in a downtrend, okay? Because it tells me that either they're starting to take profits or buyers are stepping in. Does everybody understand that? Now, you also have reversal bars. Now, reversal bars actually will identify more than likely where the next price bar will go. Now, this is a doji, and it's very important that the doji is either a high or a low, okay? So if it's a high, if I look to the left, I won't see any other price bars that touch that line. If it's a low and I look to the left, I won't see any other price bars that touch that low, okay? Then we have what we call a 3-bar reversal to the downside. And the significance of this one, the middle bar, which we consider as bar number 2, this is the last bar on your chart. So you're looking back at 3 bars. This is the current bar, previous bar, and the prior bar to the previous bar. The last bar on your chart, which is this one, will close under the low of that middle bar. That tells me the next bar should go down. Okay? Then we have what we call a reversal bar to the upside. And I'm just going to number these so you'll know which ones I'm talking about. Bar 3 is always your current bar. Bar 2 is the middle bar. Bar 1 is the third price bar from the current bar. Bar 3 will always close above the high of the middle bar. Okay? That tells me that price is going to go up from that price bar. These are very important, especially if you're right at expiration. These are very good price bars to say, hey, I'm getting out right now. Okay? Now the next one only uses 2 price bars. Okay? This would be your current bar, which is bar 1. This is going to be the previous bar, which I'm going to say is bar 2. Notice that bar 1, which is the current bar, exceeds both the high and the low of the previous bar. This is what we consider an outside bar, and it tells me that the next price bar will go up. More likely than not, okay? We then have a reversal bar to the downside in which again, I'm going to number these. Bar 1, which is your current bar, exceeds the high and the low of the previous bar, and it closes down. Now, they also call these encompassing price bars, okay, because it encompasses the previous bar, high and low. In whichever direction that it closes, typically that's the direction that the market is going to move. In this case, it's going to go down because this price bar closes at the bottom. We know that because it's a red candlestick and it closed beneath the low of the green bar. Okay? Any questions on that? Okay, now this is a great example, okay? And it's pretty much the same thing that we've been talking about. This is a trade on the euro dollar 7 p.m. to 9 p.m. And this is the Aussie dollar 7 p.m. to 9 p.m. Notice on this one, you have remaining in this trade $39.25 of profit with 21 minutes left in the trade. Notice how you made a high here. This is an inside bar, which means it did not close above the high or the low of the previous bar. But notice how this bar is forming to the downside. It's very, very strong to the downside because it opened here and it went straight down, okay? This is telling you that more likely than not, this binary is going to continue to move down. When you notice this one, you see that it's made a high, and this one here has opened, it moved down to the low, but now they're pushing it back up, okay? Again, 21 minutes until expiration, okay? You only have $23.50 left to collect on that binary option. Notice that you have $43.50 in the bank. What is your job as a trader? Which one has more weight? Okay? Is it the $43.50 or is it $23.50? Which one has more weight? To me, this one has more weight. In this one, if you see 22.75 in profit, but you have 39.25, okay, which one has more weight? To me, this one over here has more weight. If you put it on a scale, which one is better for you? Okay, this one, the price bar is telling you down. This one is telling you, hey, they're starting to take profits, and they might take the profit that you have. Lock in profits, okay? Now, let's look and see what actually happened. Oops, sorry. Okay. Actually, I didn't capture the screenshot. I thought I did. This one actually went up above 76.68. So this expired out of the money. This one expired in the money. Okay? So you would have lost your $43.50 because you wanted an extra $23. Do y'all understand that? And again, it's, which one is more important? Capturing what you have right here or capturing an extra 23 bucks? Okay. Now, let's look at managing a British pound dollar trade, okay? And again, we're looking at exactly the same thing, okay? Now, you're in this one at 24.78. You have 15 minutes left until expiration, okay? Do you see how the weight of this just about the same? Do you see that? You got $32 over here. It's about $30 left. But look at the price bar. What does the price bars tell you? Okay? The price bar says that more than likely this is going to continue down. Do y'all see that? And what happens? This is the strike that you were at. This is the bar that was building that had 15 minutes left. Do you see how it closed to the downside? And this is all anticipated from this price bar right there. In other words, more likely than not, the next price bar would be down, okay? Okay, let's go to the USD JPY. Okay, this one is 7 a.m. to 9 a.m. You have 15 minutes left, okay? You've made $6.75. Not a lot of money there, okay? Now, you can see that this one still has $39.25 left in it. So this one, the weight is over here to hold this. Do y'all see that? But now look at the price bars. They're spiking up and then they're spiking back down, and this one is closing right here in the middle. You have 2 minutes until expiration, okay? They push down, okay? They made a low right here. And when they made that low, they took it straight back up. Do y'all see that? You had the opportunity to exit early, okay? Because this is iffy. I mean, if it moves 2 pips up, guess what? You're not going to be in the money. You're going to be out of the money, okay? The price bar is telling you they went down, they made a low, and then they're pushing it back up and it's already in the middle, okay? I would exit this binary option. And at expiration, what happened? That was your expiration. Do y'all see that? This is managing a trade. Now, if you noticed, and I'm going to go back one frame because I want to point it out to you. You had $54 of risk on this trade, okay? You are 2 pips from your expiration value. The price bar is telling you they're pushing it up, okay? Did y'all notice that? And this is when I'm going to exit, okay? The price bar, and I tell my students all the time, price bar is God, okay? And to me it truly is, because I don't care how many technical analysis indicators you have, you know, price bar is dominant, okay? Gail, with only 15 minutes left, I would worry that there would be no one to take the opposite side if I wanted to close my trade. Okay, number one, this is Forex. Forex is one of the heaviest traded markets out there, okay? Binary options is no exception, okay? And you can see on this one, it's one contract there, okay? I really do not worry about one contract. If you were trading, you know, a lot of contracts, Chuck, I would be worried about it. But one contract, I have not seen any issues with getting in or out. Not on Forex, okay? Now, I don't trade like corn or soybeans, so they might be more lightly traded. But on Forex, you know, if you're trading a lot of contracts, you know, there would be an issue. But you can't actually see the number of contracts that, you know, they have orders there for. You would have had to have exited, Michael, you know, like at 3 minutes or 2 minutes and 55 seconds. The last 2 minutes you are locked into the 2-hour binary. But I wanted to show you, I mean, 1 second earlier you could have exited, okay? Does that make sense to you, Michael? I'm going to show you that in just a minute, TC. Do I use stochastics with analysis and directions? I do, Mike. I have my own stochastics that I use, but the Nadex one is real good too. Yeah, I would have already exited 1 second prior to the screen capture. Brian, Nadex posts this video after the webinar ends. Yes, Rick, you can set a profit target. I'm going to show you how to do that. Okay. Before I go over to charts, let me give you my contact information. Okay. My website, I have two. One is tradershelpdesk.com, and then there's a blog.tradershelpdesk.com. My email address is gm@tradershelpdesk.com. You can always reach me on my phone at 336-263-0122, as long as I'm not in a trade, okay? And I'm going to go over now and actually look at some charts for y'all. So this is a demo account. Please notice this says demo up here. Now, it's a demo account because this is an educational webinar, and the Nadex disclaimer still applies, okay? So do not trade with money you cannot afford to risk. Now, I'm going to just shrink that down, so if I enter a trade, I'm going to bring the disclaimer back. And let's go over to the indice binaries. I'm going to go to the Wall Street. We'll do 1 p.m. Okay. Now, TC, you wanted to know how to bring up this little chart. Do you see how I went to the market and then I wanted the 1 p.m. and there's a little chart icon here? I clicked on that and it brings up the chart. Okay. Well, see if I can do this again. I was a little bit too fast and clicked on the X. Okay, now, this is one on the Wall Street, okay? Now, these are all your different options. And somebody asked me if I use the stochastics. And I do use the stochastics. Do you see how you had this reversal bar here? Okay. This one is a weak bar followed by what is potentially a reversal bar back up. Do y'all see that? Now, I'm going to do something, but I want to make sure that y'all see the disclaimer here. Okay? So I've got a bias to the long side. Excuse me. All right, so I'm going to say, okay, I don't like the $50 of risk. There's 32 minutes left, so I'm going to take the $20 binary, okay? And this is for illustration purposes only. I'm going to trade one contract. Your risk is $21.25. Maximum profit is $78.75. Now, I'm doing this because the stochastics is starting to go up, and I had a reversal bar here, a very weak bar here, but now one that has turned into a reversal bar. What does that mean? Okay, that means with the price bar is it's telling me we should go up. I might be too far out, okay, because I'm way up here. You could also do this one for $41.75. Okay, if this would be considered at the money, okay. This is out of the money. And this is here is in the money, okay. Sometimes TC, and I'll show you real quick. Let me get my thing back. Okay, do you see how I've only got one box here? Okay. Do you see if the red and the blue boxes over here, if you just mouse over them and click, they'll start expanding. And that's something that I always check. And let me get this lined up again. Anytime you see those little extra red and blue boxes, TC, that means you have extra strikes there. I am doing a webinar on the Nadex trading platform in March, So I would suggest that you join that one. Now, let's say that I want to set a profit target on this. Okay, that was one of the questions. Okay, I entered at $21. Okay, so if I want to exit, I need to be above $21. Okay, but it goes a little bit deeper. Okay, so I entered at $21. It cost me $2 to enter and exit. Okay, it's $1 in, $1 out. We call it $2 round trip. So I need, at break even, I need to exit at 23. Well, I want a little bit of profit, right? So I'm going to set my profit target at 45. Okay? Do you see the little gray box here? That now tells me I have a profit target. This tells me I have one long position. This tells me I have a profit target. Now, this is the tricky thing. If I want to exit the position, in other words, I just don't like the way this price bar is forming, I'm going to click on the gray box. That is a working order. And then I'm simply going to click on the bid side because I'm long. I need to exit. Do y'all understand that? Now, if I click here, okay, and I try to exit using this button, then my working order will not be canceled. In other words, I'll exit, but I'll still have a working order there. Do y'all understand that? Okay. And sometimes, for example, let's say this was getting up close to it. Sometimes I'll just keep this ticket open because it might get to 43, okay, and then start to go down. Well, I don't want to risk losing the profits over $2, so I'll just keep it open. Any other questions, guys? Okay, the red box is showing me the loss. The blue box tells me I have one long position. Okay. The gray box is telling me I have one working order. Okay. Sure, I can show you. I'm just going to delete this one. Okay. So when you enter, okay, you'll have this box here. And I tell you what, I'm going to enter a sell position, okay, for those of you that want to see both the short and the long side. Again, this is for demonstration purposes only. I am an educator, okay. So I'm going to sell the $25.49, okay. It's going to have $30 of risk, $30.75, a maximum profit of $69.25. Okay? Now, notice that this is red. -1 tells me that I sold it, I'm short. The +1 tells me I am long. Okay? Now, if I am going to set a profit target on the long position, then I need to go up in value. Now, the entry price was about $21, so I'm going to set this at $45. Okay? Why? Can anybody explain to me why? If you are buying, okay, the value is going up to 100. Okay? So, if I bought at 21 and price is going up, or value is going up, then I need to set price higher than what I bought, $45. Okay? So let me place this order. And now you see I have a little gray box and it's sitting at $45. We just put the $45 order in there. Now this is the one that everybody gets confused on. Even though when you sell, the binary still pays out $100 provided it closes in your direction. Okay? But here's the difference. When you sell a binary option, okay, the value starts at 100 and it goes down to 0. Okay? Remember that I only paid about $31 on this binary, right? That is because this price, when I sold it, was at 69, okay? That means that my risk is the difference between 100 and 69. 69 tells me this is the available profit. Right. $45 is where I'm going to take profit. Now, it has to get to 45 over on the sell side because I bought. Okay? To exit, I have to sell. If I buy again, I'm just going to have 2 orders in. I was a buyer, so I have to go into, to exit the position, I have to go in as a seller. Now, on this one, I'm a seller, okay? That means if I set a profit target, I have to go down in price, okay? So in this case, I'm going to set a profit target at 55. Does everybody understand that? On the buy side, always go up. On the sell side, always go down. If you want to cancel the orders, okay, let's say I want to cancel this and just exit right now, okay? All I have to do is click here, click on the buy, see how it changes that, and amend the order. See, I'm out. You can do the same thing on the long position. If you say, oh, I don't really like the way that's going, okay? You could exit just by clicking on the gray box. and then you just click on the bid, which is the sell price, and it will take you out of the position. Any other questions on that? It does take practice, okay? But, I mean, you're in a demo account. This is where you want to practice, okay? Any other questions today, guys? If I place more than one contract on this bid, what happens to the gray box? What does it show? Well, if I wanted to buy, Oscar, all I would have to do is, do another size. I did spreads on them this morning, Michael. But I did the 4X, so. Okay. Is there some reason I don't see the boxes on the left on demo? What boxes are you talking about, Sharon? Are you talking about these boxes over here? Well, now you're not going to have a red, a blue, and a gray unless you're in the market. And if you have, a lot of data here, do you see how I don't have any red or blue boxes? But again, do you see these tiny red and blue boxes? You have to keep clicking them until they appear for you. I'll try to do a webinar on spreads, Michael. They're actually pretty easy. And, some of the things that I do as a trader is I look at, do I want to use a spread on this or do I want to use a binary? And sometimes it's just kind of, what is the risk? How good is the setup that I'm looking at? This week I've done more spreads just because, it's the third week of the month, basically. Tickets. What kind of question do you have on tickets? Yeah, you can drag. I just find that most of the time it confuses me more to click and drag. My book is Trading Nadex Binary Options, Keeping It Simple Strategies. You may want to log out and log back into TC. What is a good news channel to, okay, I lost it, to know how the market is doing? I don't do a lot of news, Joseph. I think it skews our perception. The most that I will do is bring up Forex Factory, and I'll show you why. This is Forex Factory, and the only thing that influences me are these red reports. I love binary options and market reports, okay? Because I never traded market reports as a future and Forex trader. So being able to trade those, wow, it's great. Okay? So, for example, this morning I was doing the USD yen and the euro dollar. Okay? Yeah, Michael, I'll try to schedule a webinar on spreads. Yeah, it probably depends on what you're trading. I don't do a lot of like soybeans or corn, any of the commodities or grains. Okay, so this one works great for me, and I am a heavy forex trader, which is probably why I use this one. All right. Well, again, I want to thank everyone for joining me today. I do appreciate it. I hope you have a wonderful day trading. And of course, if you have any questions, you can always send me an email.